Welcome everyone joining us live. Today, you're welcome to the introductory course on tax liens and tax deeds. I am Dr. Vivian Atud. If you're returning to the program, you are welcome. If this is your first time, shout out to you. So in the next few minutes, we're going to be looking at tax liens. If you've already watched some of our courses online, that's great. But if not, this is still a good place to start. Because we're having some new people joining us today, I just want to give a background. And let me just start with a question. What if I told you that on property taxes could actually be a huge investment opportunity for any person living in the US? Some people even invest from out of the country. It can create huge investment opportunities. But sometimes the things you read on social media about these can be dangerous and they can also be incomplete. So it is very important that you get the right information, you get the right guidance before you make a move in this industry. But before I even get ahead of myself, I just want you to give, I want to give you a perspective. When we look at 2025, for example, governments across the US reported that they raised about 2.5 billion US dollars in sale of property. And if you live in the state of Florida, it was over 400,000 properties that went under the hammer in 2025. In the state of Maryland, the latest statistics reports that 12,000 properties went under the hammer in 2025. It's a huge market. When you even look at the number that are listed, some get redeemed before the day of the auction, but the final number that went to auction in Maryland was 12,000. Auctions are still going in some counties. So for 2026, we're only going to get the full picture somewhere close to the end of the year. And the question is, when we talk about tax deeds, tax liens, and all this, I want people to understand, what are we talking about? What are we talking about? We are talking about the fact that in the US, it is law that if you own a property, you need to pay the county some taxes. And if you don't pay, depending on the state and the county that you are in, that property can be sold as what we call a tax lien. I'm going to explain that, a tax deed, or some variation, some hybrid form. So in the olden days, before recent court cases, counties used to auction properties for huge amount of money. They can take your property and maybe you owe them $5,000, for example. They can auction that property for $40,000, $30,000, and guess what? The county used to keep the balance. But recently, there was a court case in Minneapolis. There was a condo that was sold. This taxpayer owed the government of Minnesota $15,000. And this person could not pay. The government took this property, sold this property for $40,000. And if you take 15 out of 40, you're going to be left with 25. So even though this person could bear losing the property, they felt they were cheated, that at least the government could have given them the balance, which was 25, and they went to court. And the court ruled in May of 2023 that any excess from an auction over and above how much the person owes must go to the original owner. And that's the new rule. Before 2023, it wasn't like that. And if you go to other states, you would find that governments are rewriting rules about excess, rules about how the bidding should be before they could sell for any amount, and the laws allow them to take that money. Right now, They are only allowed to keep how much is owed and any excess they give. But I want us to get into the real business of the day. When we talk about tax lien, tax deed, what are you actually buying? Tax lien certificate is what we call, it's like an I owe you. I owe you. You are not buying the property. The owner can redeem, and in some cases, they do. And what happens? You earn an interest depending on the states. Like in Maryland, it could be anything from 18 to 24%. So the government needs money. Why does the government need these taxes? To pay the police, to pay firefighters, for health, for road maintenance, and all the functions of government in a municipality. When government doesn't receive this money from the taxpayers, and they already budgeted how much we're going to pay for firefighters, how much, so they're budgeting knowing that we'll receive this money. And if this money doesn't come in, they shortfall in budget, but they need to raise that money. So the law allows them to sell your property, in quotes, sell your tax deed or tax lien. Like I said, lien is I owe you, like in Maryland. Government will say, we are short of 15 million. Can you help us with this 15 million and hold these tax certificates? If the owners come and redeem, they're going to pay you an interest of between 18 and 24%. If they don't pay you, after 6 months, you have a legal right to do what we call foreclosure. So what that means is you can ask the county. If it was in the city of Baltimore, for example, you go to the high court, you can have your own attorney and you can ask them to initiate what we call foreclosure proceedings. And in that case, if you go through that process, then you are now legally the new owner of that property. But that's a process, and you want to know more. This course is for educational purpose only. This is not financial advice. If you want to actually go and risk your money, you want to talk to somebody, because in a 60 minutes course, guess what? I'm not going to give you all the ins and outs and all the things that you need to be able to make this kind of critical decision about your money. So number one, I've explained what tax liens is. If you have any questions, you can ask it at the end. Tax deed. Some states, you are buying the property itself. There's a lot of states in the US where there is tax deeds. I actually have, in my detailed courses, I have a map of the whole US, state by state, which one is lien, which one is deed, and county by county. I have all this analysis that you can have a look at so that you can know where to participate, because you can buy any state in the US, you can buy any county, and there are different kinds of, there's even what we call mobile homes. Think about it. You can even buy RVs, mobile homes, and all of these from tax lien and tax deed auctions. And guess what? Some of these mobile homes, they actually cash cows because they're affordable. You can easily get a tenant, and guess what? Some of them are so beautiful and you can make money. So tax deed, you own the property. So what happens is that you take the property, and because it was a repossessed property by the government, there's what we call the process that you need to clean the title deed. Cleaning, it's a legal procedure that if you go to more detailed cases or talk to your attorney, they will tell you exactly how to follow that procedure to get it sorted out. So states like California, Michigan, and many others are tax deed states. You can actually own the tax deed. Maryland, Florida, Arizona, Illinois, and many other states are tax lien states, which means you buy the I owe you tax deed certificate. You're going to receive in the mail a certificate, and that certificate tells you that you've borrowed your money to the government, and they're going to give you back with 18%. If they don't give you back within this amount of time, you can go ahead and foreclose this particular property. Tax deeds in states like California, Michigan, and many others. I've got a map of all the states, the 50 states, which one is tax lien, which one is tax deed, so that you can know which one to look at. I share in my more detailed classes or in coming weeks. So there is also what we call redeemable deeds or reformed system. So Texas, Georgia, a deed, but the owner can buy back. What that means is that you can actually buy the house, the deed at the auction, but within a particular period, they give the owner the rights to say if they have the money, they can bring back plus this interest and they can actually get back their deed. States like Georgia, states like Texas, states like Minnesota, I think also New York, they have this kind of what we call redeemable deed that you can look at. So the thing is, rule number one of entering this market is you need to know which of these you are actually targeting, which of these operates in the state before you even do anything else. Is it a lien state or is it a deed state? That's rule number one. Rule number two is now you have to do what we call your due diligence. So, like I said, these are all sold at the level of the county. It's not a federal government or a state government kind of auctions that happen. Every county is the unit where you have to go to. So, like I said, what is sold? Deed, liens, hybrid. What you need to know, so I want to give you 10 questions you need to ask, and you want to go details with any of these questions, hit me up. We'll get into a more detailed conversation, or you join my advanced course. I will put the details, or you can also reach me and be part of that, and I can go through answering this, because you need to get these questions answered in order to make a decision. What is sold? You know, the states, for example, Maryland is a lien state. That's what is sold. If you're buying in California, it's a deed state. So you need to know what is sold. Is it a deed? Is it a lien? Is it a hybrid? What is the statute? What is the law governing that property sale, deed, liens in that state? You need to understand. Are there some new amendments, like I was saying, following the 2023 cases that happened in Minnesota and Illinois, talking about excesses after auction? There were some adjustments in the legislation in different states, and many states, including Maryland, are also adjusting that legislation to suit the outcomes of that court case. So the next question that you need to answer to be part of this system is, you need to be able to answer the question of what is the full sale calendar? I mean, in June, we had an auction, Baltimore City. July, we had Montgomery County. We had in April, Prince George County. We had Charles County and all other counties. There is a calendar, and then you need to understand how this calendar works, because there is a time for you to register. There is a time for you to ensure that your registration has been confirmed and everything has been sent to you, the details of the auction. And so you need to understand, how do I register? What deposit is required? Some counties require as a minimum as $100, others is $500, others is $1,000. So depending on the county that you are dealing with, you need to know how much is registration, where do I register, how do I register. When I'm doing a detailed county teaching, like we're preparing for an auction that is coming for a particular county, that's an advanced course, that might be $39 course or something, and we will sit and go through all these things that are required so that you become successful in that particular auction that will be coming. So how does the bidding machinery work? Because for some counties, it's online. You need to understand how the online system works. You need to understand, how do I place a bid? And I do a dry run, like a practical exercise, explaining that in the course so you can actually see. If it's a physical bid, then you need to physically go. They'll give you the address and the location, one of the county houses where the thing would be happening and how that will operate. And the question is, how and when do I pay for my bid? You need to also understand, how do I pay? Because guess what? If you don't pay following the procedure within the timelines, the next bidder, let me say 10 people bid for a house and you were the highest bidder, the house goes to you. And that is assuming that you fulfill all your duties, you pay everything within the time frames and following the procedure that is outlined. If you don't do that, the next bidder in line would be the one that would take that particular house. The question is, what interest or penalties do I earn, any caps? And I will explain all this. Interest depends on what is stated in the legislation, but there are also limits depending on the states in which you are. So in detailed courses, we go into all this so that you understand and you are able to make the right decision after answering all of these questions. The question is, how long is redemption? And the answer to that is, it depends. In some states, like in Maryland, 6 months. Other states, 12 months. Other states, 18 months. Other states, you can actually start redemption in 3 months. So like I said, it depends. And we deal with this state by state, county by county in a detailed course. So you need to do your homework. You need to know what happens. So you know how to put your money and how to prepare for kind of foreclosure. So all those things. And that's the important part. What are the foreclosure steps? What are the costs? What are the deadlines? You need to understand, because guess what? Like in Maryland, they give you 24 months period. If you don't foreclose within 24 months, you lose your money. So in Maryland, if you buy a tax deed, the government gives you up to 24 months to foreclose it if you want to take ownership of that. After 24 months, you are out. So you need to make up your mind, and depending on the state where you are, that you work within those deadlines. What are the foreclosure attorneys? I mean, we have some sets of attorneys we're already talking to. We can include you in our networks and show you some of the details, but all that in a detailed course, in an online course that is just, we're doing this for an hour. You're not going to answer all of those questions. So, but it is very important that you get your answers to this question. And the question of what happens to the surplus, because you go to bidding. I was bidding in the Baltimore City auction that just happened in June. I realized that I bid for 4 properties. I only won 1 in Baltimore City. And this is what happened. 3 of the properties that I lost, the winning bids were over 3 times the valuation. The winning bid. So if the government valued the house, because guess what? There is a difference between government valuation and there is a difference between market valuation. So the market value of the property. So these people, I don't know what they saw in the property. So they bid 3 times. So when you see things like that, and that's why when you prepare your bidding strategy, you must have a cap. You can't be excited, because guess what? The property, the tax lien and tax deed market, back in the day, it used to be mostly small investors and small developers. Right now, banks, pension funds, insurance companies, many, they are getting into this. So they are pumping money into this. So you will see a property that you are bidding and you are putting your cap here. Those big companies, especially in big industrial companies, big development zones, they are going to come in at a very high level because they badly want to build a magnificent project there. So these are the things. So you need to understand, how do I put my cap? Because if you have the wrong bidding strategy, if you overbid, that might also impact whether you are even able to pay, because guess what? The timelines to pay for these things are always short. Some it's on the day of the auction. Some it's just a few days after. So you need to know exactly, how do I put my cap on all of these things? So like I said, these 10 questions, try and answer them. What am I buying? Where is it located? What are the rules? How are the bidding procedures? How do I register for the bid? All these things, you need to answer these questions. Then you are able to understand your next step to go out there and bid. So there are also 7 steps when it comes to the parcel, like the land or the property, because every property has what we call a parcel number or parcel directive. You need to be able to understand. You need to confirm this. There was a property in Baltimore City. I was doing research, and they valued the land. They valued the building. This property had a building on it. So it was like a 3-bedroom property. So they valued, the county valued the building at 0. So I became curious, because then I said, let me call the department in Baltimore City that is in charge of valuation and all that, and find out. I asked them, is there some demolition orders on that particular property? Is that property a condemned property? Because you need to know. Demolition order, condemned property, which means that you can't do nothing. You need to bring it down. So, and maybe if you have those on a property, what that means is that if you buy it, you need to bring it down before you start construction. So when I call them, they now clarify to me that in that particular property, the reason the valuation was zero for the building, because there was a valuation for the land, but the valuation for the building was zero. So they now explains to me that the reason that valuation was zero was because the house was vacant. And in terms of the rules of Baltimore City, they can actually value a property at zero if no one is staying there and it's not generating no income. So you need to understand this. If when you check the property ID and you confirm the ID, you need to check the valuation and you need to confirm with the county why is this property valued at this? Because when it comes to auction properties, especially liens and deeds, many of them you will see valuations very low or valuations at zero when it comes to the housing. So it could be there is a condemnation order on the property, there is a demolition order, or in the case of Baltimore City and some other counties in Maryland, it could be that the house is vacant and they have decided to value it as zero. So you need to understand all this before, so you can even find your GIS map and begin to look at where the property is. You need to read the legal description. They talk about the dimensions, they talk about this and that about that property. You need to spend time to understand this, and we go about some of these things in our detailed course. And you need to be able, when you are making serious investment decisions, especially with big properties, you need to be able to pull the land records. You need to pull the land record. You need to pull the land records and see what is going on there. So it is very important that you look at things like that. You pull the land records, you look at what is happening there. And another thing is read the assessment. Read the assessment. They're going to have an assessment of the property, the land, the building that is on it, and all that. You need to look at the value, the class, the size, the tax history. It's important for you to understand this about any property. And you can also look at area photos of the thing, like when you look at how properties are listed on liens and deeds and all that, you can pull them up and you can actually see the area of the property where you are buying. So the last thing, see it with your eyes. Do what most properties you can't access it because you can't. So what we do is you drive by, you just drive by and see the area. You just drive by. You're not gonna see the place inside, but you just drive by. So it's important that you understand this, because investment, it's about numbers. It's about numbers. Does the numbers make sense? Does the numbers, you don't have to be emotionally attached when you're doing any kind of business, talk less of property. So you need to do your number crunching, like we would say, analyze your numbers, confirm the ID, look at the GIS, read the legal explanation, pull the records, look at the assessment. All these things will help you. And let me put some red flags, because it's very important that people understand some of the red flags when it comes to tax liens and tax deeds. Like I said, it's a very lucrative business, but you need to do your research right so that you make the right decision. Because guess what? You don't do your research right, you're going to buy something that maybe the parcel identity is confusing. The parcel identity is not clear even in the government's own records. You buy something that is unbuildable, maybe it's a small stretch of land that the government says you can't build nothing there. You own it, but guess what? You're not allowed to build there in terms of the law. So you need to understand that. You also need to understand whether is there a federal lien, an IRS lien, something attached to the thing, maybe especially when it comes to industrial and retail and kind of commercial buildings. They might be owing the federal government, not just the county. So it might be something at a higher level. So you need to understand some of those risks. Another thing is it occupied? Like personally, I buy vacant land, I buy non-occupied or non-owner occupied land. That's my strategy. I am never going to buy a property with someone inside. Number one is because first, these are distressed properties. It already means the person can't pay. So if someone is already sitting in the house, from an ethical point of view, for me, I wouldn't find it proper to get somebody out of a house because I want to take over the house and renovate it, even though I've bought it. The question is, I'd rather buy something that is vacant because there are so many of them. I buy empty land, there are so many of them. It's easy for me to get control of the house. It's easy for me to develop it. Because guess what? Some of these properties, the people have even died. Some of these properties, the people have changed states. Some of these properties, the people are in homes, none of their kids want them, some of these properties, and they are vacant. So there's lots of those opportunities. Personally, I won't buy any lien with people in it, because guess what? If your objective is just for the interest, those ones with people in it, you can buy it. Obviously, there is a high chance that they will go and borrow money or get something to pay so that they can continue living in the house. So if that's your strategy, so like I said, it depends on your strategy. I'm talking about my strategy. I'm not giving anyone direct instructions to say go and execute. So you need to also understand, like in some states, Florida and across the US, you need to understand the environmental and flood exposures of the areas where you're buying, because you also don't want to go and put your money somewhere where it's so prone to flooding and you can have lots of natural issues. And look at legal access. Like I said, first, properties with people on it, you might not be able to access it directly. Some other ones might also have restrictions. So you need to understand all this. I talked about the title deeds. You need to understand whether it's tangled or whether it's a clean title. There is a ways to do all this research. You also need to check, is there any active bankruptcy filing on this particular property? Because guess what? Some homeowners, especially, this happens mostly in owner-occupied liens and deeds where the people are like, and also commercial properties. Instead of just letting the government take over, we're going to file for bankruptcy. So it now makes the process even complicated. So you need to understand what's going on there. And I spoke about condemned properties and demolition orders before. You need to check. It's just a phone call away. You phone the county office that is in charge of all this and ask them, is there, you give them the property, the parcel number, they're going to check it in the system for you, and they will tell you, is there a condemnation order on that property? Has that property been marked condemned? Is there a demolition order on that property? So you understand all that before you make your decision. So like I said, any of these could be a red flag for you. But if you join any of our advanced courses, we go through this with you. You do more due diligence before you are able to risk your hard-earned money in investing in the right property, because guess what? This is a multi-billion rand industry and people are making it big. But people who make it big, they do their homework, they do the right research, and they invest properly. They buy the right property. They have the rights, because it's not just buying the right property. You have to have the right strategy to foreclose. You have to have the right exit strategy. What are you going to do with it when you take possession? And there are lots of options for exit strategy. Are you just going to sell as is, because you could sell to a wholesale developer? Are you going to improve the property and sell it to another investor? Are you going to use it for rental? Are you going to create an institution, whatever? So there are different exit strategy, long-term, short-term. So depending on what you have, maybe you could do some kind of healthcare kind of businesses there. So you need to be able to do all this kind of research so that you make the right decision. It is always about the right decision. When it comes to investment, think about it. You're not just buying lunch for your family, you are investing. So you want to invest your money, you need to do your homework. I always say, do your homework. So it's always important that you understand. And another thing I want to warn, it's what they call the winner's curse in investment. When it comes to auctions, some people are so emotional. Oh, they want that house. And because they want that house, they keep bidding and bidding and bidding. So I advise everyone, before you go to an auction, if you're part of my advanced class, I'm already going to give you pointers and say, for this particular property, like if you show me I want to bid for A, B, C, I'll tell you, put your cap here, because we've done some numbers, we've run some numbers. Don't go and get emotional and then you see, oh, somebody is doubling your money. Remember, I said I lost 3 properties. The people bid 3 times. So think about it. I was not going to match them. Those could be big institutional. You can't be competing with the Bank of America or those big institutional investors. So you let them get those properties because there is lots of options. Every property auction, there's always what we call leftovers. There are always leftovers. Not all properties that go on auction actually end up getting sold. So don't be emotional. If you miss one property, there is a lot more. When I went to Baltimore City, that was my first auction. I got one. My aim was to get three, but I got one. And I saw the other three went to these people who bought all my other ones. They were 3 times my bid, so I was never going to meet them. So I left it. And then Anna Rundell came around. I went to Anna. I bid for about 10 properties. I ended up getting 3, and that was good. So, and that's how this thing happens. You don't have to be so fixed. Every week there are auctions from one county to another. This week there will be auctions in Indiana, in Pennsylvania, in different states. So last week and the week before there were auctions in DC. So you don't have to be emotional about losing a bid, because there are always other opportunities. This is a huge market. Like I said, last year alone, over 2.5 billion was raised. In Florida alone, over 400 properties were sold on auction. In Maryland last year, over 12,000 properties were sold on auction. So the opportunities are always there. Go to Pennsylvania, go everywhere, from land to homes to industrial, commercial, to what we call your temporal homes. You find all those. So there's too much opportunities out there, but you need to do your homework. I can never emphasize that alone. So on the auction day, you just need to have your strategy. I say have your one page, and you need to know that's your decision, because remember, auction day is decision day. Am I going to stake my money? And there are 3 decisions you need to make. So before that, you've analyzed. Property A is a pass, and you've done your analysis, and the statements are not clear to you. The questions, remember, I gave you some 10 questions. Those 10 questions have not been properly answered. I gave you some pointers, and you've seen some red flags there. Leave them alone. There are higher risk investors in the market, the banks, the insurance companies, and all these big investors. Let them take the bigger risk. They can afford losing this kind of money, or they can afford bearing bigger risk that you as an individual investor. So you need to know what kind of properties I'm not even going to touch. That's what we say pass, because the 10 questions you cannot have your clear answers. Watch the ones that are most of the answers, but there is still some lack of clarity. Just watch and see how it goes. You might see people excited about that, and you are feeling like, but you haven't had all your clarity. Just still watch it and see how the bid go. Maybe in the course before auction day, if you get some of your clarification, then you can try to bid. So you classify your properties into bid, watch, pass. Like I already explained pass, I explained watch, and now bid. You have seen the one that have checked your boxes, have answered your questions. That's your property to bid. And like I said, every serious parcel that you want to consider, it ends with that one page that you've written. You've written your questions about that property. You've checked those questions. And on the day of the auction, you're just going to put in your bid. Otherwise, you watch. Otherwise, you pass, depending on how many boxes that they actually checked. So like I said, every week there are auctions coming. If you join our WhatsApp group, I share some upcoming auctions every week. You can have a look at. You want to join my advanced course, where on a weekly basis, I can take the auction that is coming for that week, depending on the demand. If many people are interested in it, then I can do a detailed course there where I can do all the risk analysis and things and give you suggestions for you to then make your final decision on what you might want to invest in. Like Indiana is coming. There will be lots of counties in Indiana, Pennsylvania. There's a lot coming up in Pennsylvania. There is a lot coming up in Florida. So in Maryland, most of the counties have already passed their auctions, but there's a lot of states. There's 50 states. In New York, it's coming up. In New Jersey, there is a lot coming up in New Jersey. in in Atlanta, there is a lot coming up. I mean, right upstate Arizona, there is a lot of cheap auctions coming that side, very cheap. If you want land, you're a developer joining us from any part and you want to look at all that. So like I said, this module was based on introduction, and I think I've done some justice to giving a general overview. I do county by county, but those are paid courses where we'll go into the details and we can show you what's coming up in that particular county. But I will continue to do more introductory courses, general information about what's going on in different counties and giving us high level knowledge that can help you, I mean, make decisions to invest in any of this. You can use the information you get and do your own homework and invest. You don't have to attend my advanced course. But if you feel like you need help, you can come and you can ask me any question. I will still answer. You don't have to be a part of any advanced course to ask me any question when it comes to tax lien, tax deed, or the hybrid form. This is a huge market. People are making lots of money in it. People are transforming lives, improving communities, doing all this. You too can do it, but you need to do your homework and you need to do it right. So I will yield my mic now. Anyone joining us online, you want to ask a question, or anyone joining me in the room, you can ask your question. This is the time. Any question?
Yes, I have a question.
Yes.
Thank you so much for the introduction. I'm really, really very interested in knowing this. You did say in buying a property that has a zero value, like a house that is unoccupied house. If this house is in good condition and is not giving any value, and you are going in for this property, would they still give you the property at the zero cost, even though the property is good condition, just the fact that nobody is living there?
Yeah, those are just like the valuation of the county is based on their own accounting. So that's why I said there is a difference between county valuation and market value. Market value is what you see on Zillow, on different property sites. That's the market value. And the market value is based on average prices of property in that area, what properties are selling for. So that is market value, which means a property that is good in that area of averagely decent amount of beds, and that is the market value. How much can you buy a 5-bedroom on these streets? They're going to do an average of how much these kind of properties with this kind of development in this area go. So the county valuation is that for the purpose of their own accounting, if depending on the county, like I said, they can value a property zero, but that property is really gold for you, because once you buy that property and within a few months you change that property, the market value now, remember, you are not selling your property for county valuation price, you're selling your property for market value. So once you do that, then you bring your real estate agent, they're going to come and give you actually the market value of that property. So, but because you bought the property that was not occupied and the county valued it as zero, that's a plus for you. So, but like I said, it could be valued as zero because it's not occupied, which is a benefit for you because you will change it. And as long as you get people inside and you renovate it, and then you get your real estate agent, they can tell you the market value of that property, how much you should lease that property for when you want to sell it, for example, or you can use it for anything else. So that valuation is just for the accounting, is for the books. So if a property is condemned, maybe because the structure is unstable or anything like that, the valuation goes to zero. If a property has a demolition order, which means you should bring it down, the valuation goes to zero. In Baltimore City, if a property is also vacant, the valuation goes to zero, which is a plus for an investor.
Okay, you did say if you have a property on deed and somebody now wants to get back the deed, what happened with you or with your money that you have invested in it?
Okay, that is in the case of redeemable deeds, like the state of Texas, the state of, I think you have Texas, you have Georgia, and a few others. I have an Excel sheet where I've classified all these. So if you buy a property in this state where they say redeemable deed, which means even though they've given you the deed, there is a time period, just like they have time period, there's just a time period they give the owner that if you can raise back your money for your property within this particular time and this interest, you will come and pay this investor their money back plus this interest, and they will hand back your property. That's according to the laws of those states. So that is redeemable deed, which means you have the title, but you can, if like in Texas, it doesn't come to my mind now exactly what's the redemption period, but there is a period. I think it's about 24 months, if I'm not wrong. 24 months, I don't know, 24 months or 12 months, but I'll check that. But every state that is a redeemable deed state, they will tell you. So like you are borrowing money with interest, and they're giving you that tax deed and telling you, if this person doesn't bring your money within this time, this property is yours. So you don't have to go through foreclosure. And so that's different. Like in the lien state, within 6 months, if they don't bring your money, you now have to go to court and foreclose. In the deed state, when you hold the deed.
Oh.
If they don't bring, you now just take over. You understand?
No foreclosure.
There is no foreclosure in the deed state. But in the deed state where you have redeemable deeds, because there are deed states like California and Michigan and others, those are deed states, they don't have no redemption. In those deed states, you leave the auction and you go and do transfer, you do registration, you put the property in your name, because those are deed states. In redeemable deed states like Texas, Michigan, and others, you get the deed, but you are still holding it for 24 months. If they don't come, you finally go and do the final cleaning of your title and it is yours. If they come back, they bring back your money and your interest. And then you hand back the deed to them and they go and keep it. In the lien state, you have the lien. Like in Maryland, for example, you hold it for 6 months, the lien certificate. If the people don't come in 6 months to pay your money, you now go and do foreclosure. So for deeds, you don't do no foreclosure. Redeemable deeds, you also don't do foreclosure, but that deed can be redeemed.
Maryland also considered a deed state?
No, Maryland is a lien state. And Maryland, different lien states have different policies. Like Maryland lien is 6 months, which is good. Other states have 12 months. Other states have 18 months, lien states. So, but I have a detailed Excel workbook with all the states and whether it's a deed state, it's a lien state, and what are the periods, all those things for people who join my masterclass.
Thank you.
Thanks. Any more questions? Anyone here with a question? Okay, I see no hand raised. All right. There are no further questions. It has been my pleasure serving you tonight. I hope you had some value. You can also post the recording on my YouTube channel, as always. So for those who could not make it, you will also have access. But I'm going to do this again next Tuesday. For those who will come, I'll teach you something else about tax lien and tax deed. And those who want to join any masterclass for any of the upcoming auctions, I'm also going to share that information. So until then, you take care. Thank you.